Welcome, everyone. Welcome, good evening, good afternoon, and good morning to everyone. Thanks for joining in today. Welcome to Todd, Adinda, Dion, FX Street Admin, Desi Roland, Lib Lopez, Double A, Planet. Welcome back, Planet. Matthew, Luca, JM, The Grace. I see Marco came in as well. Hello, everyone. Thank you very much for being here today. This is the FX Street Tokyo Open Live Room. It's a day which is colored in silver, and you obviously know why. We're going to review one of the trades that we recommended in the past year, and today we got into that first target. Very exciting for me, for everyone was involved. I know that some of you are deeply involved, and it's a day of celebration. So welcome, everyone. Welcome to FX Street Tokyo Open Live Room. This is a daily show where we feature real trading, and today is a great example. At the very heart of the Asian session with me, I'm Giuseppe Basile, also known as the FibStalker. Thanks a lot for joining in. This is now a daily show from Monday to Thursday at 7 p.m. EST, and we'll be together around 45 minutes trying to spot next opportunities for the coming days, particularly, of course, for tomorrow and the coming days. Today is Tuesday, April the 19th, 2016, and it's 7:05 time here in Toronto. I'm broadcasting here from Toronto, and I want to say hello to you. Welcome back. Thanks for joining in today. If you don't know me, that's the face behind the voice. All right. So if you know me a little bit, you also know that I take risk very seriously. And in fact, I believe that risk management is the number one skill that you will need to master. A lot of people, the majority of people, I believe, never master risk management, and that's the reason why you hear those horror stories. I also believe that trader's job number one is to manage risk. Once you've managed risk, you either end up with a small loss, sometimes no loss at all, especially if you implement a risk-free trading approach, which I feature and I use myself, or you end up with gains. So as we did today. So before we get into that, let me remind you about risk and that trading Forex and its derivatives, futures, options, and CFDs, and other instruments with retail of exchange transactions involve substantial risk of loss, and it's not suitable for all investors. You may lose all or more of your initial investment, and leverage can work for you as well as against you, as it magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Now, please also review the great new website at FX Street, as well as the FX Street risk disclosure on the website. And if you go to live video now, usually when you go there, you'll find all the videos, today's videos, and generally you will find the last the upcoming video. Please also review the FX Street risk disclosure on the website. The information, including commentary and trade ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research, which should be performed before making your investment decisions. All the information I provide here are for general information and educational purposes. I, Giuseppe Basile, FibStalker Consulting Incorporated and FX Street, will not be responsible for any losses incurred in investments made by attendees as a result of any information in this webinar. All right, so thanks a lot for joining in again. And let's dive into our chart, which are put below on my screen here. All right, so this is it. What you see on the screen here is the SP 500. Welcome, everyone. Let me do another check here. Thanks for joining in. We have a few people again. Here, welcome to the Grace JM, Luca, Matthew, Planet, AA, Label Lopez, Roland, Marco, FX Street Admin, Dion, Todd, Adinda. I had some students writing to me in relation to the the trade we're gonna review in a moment here. That's the silver trade. Hello Marco, hello Todd, hello all. Touched the first target on Canadian, pulling back slightly. Is it smart to wait for a retest? I suppose you're talking about US dollar, Canadian dollar here, Todd. If that's the case, we're going to review that in a minute. Before we do that, let's review the SP 500. Why I insist on the SP 500? Because this market can't tell a lot of what's going to happen next and when the next cycle is going to start. When you're a trader, you do not look only at Forex. Of course, you might be a specialized trader, but if you do this for a living or it's an important part of your income, then you want to make sure that you become with time proficient with all asset classes, so at least you cover as many as possible, like for example stocks, equity in general, ETFs, and possibly at some point futures. Futures are not more are not riskier than other markets. Actually, they are less riskier, I believe. They require more margin, money to be set aside, and generally they require, slightly bigger portfolios if you want to trade multiple of one contract, and that would help you a lot in managing risk. But generally, you want to, with time, become proficient with all or the majority of asset classes. So when we look at this SP 500 mini futures here, we see price into that and now above that 2089, and this market is now challenging previous highs. We're going to see these highs challenged again in the coming days, and I believe you're going to see new highs. There's not such a thing as a triple top. They're not very common. I do not believe that we're going to see a triple top here, which brings us back to where this market can actually go, looking north here, where this market can go. Well, we have a clear target that has been confirmed again once the market actually respected this area, and that target, it's going to be in the 200 and 2200 level here, and that's the more exactly the 2217, but this market can go much higher. Believe it or not, now this market is opening up to much higher targets at 224.07. I noticed today that my friend Dale Pinkert has interviewed Ron Maisel on FX Street, and that's quite interesting because Ron Maisel is one of the founder of the Canadian Society of Technical Analysts, and I had the honor and chance and honor of meeting him in September last year when I was invited by the local Canadian committee to present at their annually in the annual conference, and I had the chance and the honor to meet Ron Maisels personally. Ron Maisels is a 40-year really veteran in the markets, and one thing I really was proud of, and it's not to boast, but when I presented my view on the SP 500, he was quite pleased because he told me that it basically matched his view of the markets. And let me remind you something very important. He told all the audience. Now, when you look at this market here, when you look at the last, and maybe I will take the SP 500 here just to get a little bit more price history here. Yes, he looks at the 40-year cycle. That's correct, Todd. I mean, you are very diligent, and when we look at the way he describes this cycle here, he says this cycle has started in 1987. Okay, so soon after that, a huge move lower, scary move lower, this cycle has started, and he says that very interestingly, the cycles have all the same shape. He said, went down to study the equity history of equity, considering, of course, also the moves back in Europe, of course, starting from 1637, including the tulip bubble, and he explains that all the 40-year cycle, they all have the same size. Quite interesting. I mean, and the size is exactly this one that you see on the screen. There is a bottom, a first top. There is another bottom, a second top, almost same levels. There is a second bottom, and then there is the last move higher, which can be very, very extended, right? And I believe this extension is going to bring price into 2500 eventually. So Perry is saying, so cool, this new page. Nice. Yes, I mean, you mean the live video, right? Perry, I believe it's great too. All right, so this to say then, for this market, what we have to anticipate, added an additional strength here, and that's what I believe is going to happen. So I have some colleagues who are short ETFs, SP 500. I believe still early for that, so don't be in a rush here of wanting to short this market. There is nothing to short here, and I think I can comment on that comment from Pete there, who actually is saying, "Oh, this page looks great here," and it's probably making reference to the new FX Suite here, which you can see here on the screen, which is quite nice, because now I believe it makes it's much easier to let me move this away. It's much easier to also find the shows, and you just go to live video and then you get the next show. The current show is this one, and you have the previous ones. Very easy to navigate. And if you are looking for that interview with Ron Maisel, highly respected professional in the Toronto and Canadian technical analysis community, here you go. That's the man, a highly respectable individual and serious student of the market at his age. I mean, it's great. It's a great achievement. So let's go back to charts, of course, and our markets, and that's why we are here. So let me bring you back to these charts here. Okay, so you know what I anticipate in this market. Now, how do we trade the next move? Because it's okay to know what's going to happen, but I want to know what to do next. Eventually, this market anyway is going to retrace a little bit, and that would be a good opportunity for a short with an ETF. A small, quick trade there, not something to keep for days. And I think that we might be approaching that at the end of this week or beginning of next week. I do not recommend shorting this market. When I mean short, it's just for a trade on the 4-hour time frame. All right. I want to talk a little bit about silver. As you know, this market has made me and a number of friends and other traders very, very happy. And I've been talking about this trade for some time. Indeed, I received a comment from one of the students, and who actually we actually, counted the number of days that he had to wait for this move to materialize. You will remember that I mentioned 1660. Now, since the beginning of March, when we looked at this market trading, the 1480 area, where that area of participation started, and we had to, be sit on our hands when this market went to retest this area, and then in few days this market actually exceeded our expectations as well, because not only went into 1660 but went well above it, and it has now the potential to trade all the way into 1750, which I also mentioned in the previous days. Before I continue, I see here Todd. Ron has been around for a long time. He's 81 years old, and you won't guess it. Indeed, I met him, and he's a very respectable person. Perry, yes, Ron Messels is so good, especially for Saigoli. He's the man. Yes, he's the man to go. Very serious individual. He's very highly respected by people and the community as well. I saw that in Toronto in September. I didn't know him, but I came to quickly appreciate the work of this man. So going back to silver here, what we do expect for this market, I anticipate maybe a little bit of profit taking here, but eventually this market moving into 1750. There are some of us who still have a position. I took off something today. I had a triple USLV, triple long, and I took some off. I put a limit order in the morning, which was filled at 1690 on that ETF. So I'm still holding a position higher. What happens if this market gets into 1750? I will tell when you will come back, and we might be able in a position to keep running this price higher. This reaction in price might be telling a story on the dollar index as well, and that's very, very important. And that's the reason why I also stop on this market. The dollar index is not reacting yet at that area where we are looking for a reaction. That area, if you remember what we said last week, it's where price is moving around at this stage. If this price does not react here and keeps moving lower below 92.65, you can kiss goodbye the dollar. All right, and this has some implication on the euro dollar, of course, because this market has reacted initially intraday to this 113.50, but as the dollar has basically not reacted yet, we don't know whether this market is really going to make it into 111.43. This market could just continue higher if that's the case, and it's not moving in a very elegant and predictable way if it continues higher. However, we could also put a temporary double top here, and then this market could still make it into 111.43. I want to remind you that the dollar index is still within this area. It can still get participation despite today's drop here. And if it does, we know that on the weekly time frame we have the next level of resistance. I want you to keep this in mind, because this scenario is not, we cannot rule it out yet. We still have to keep that into account. That is still possible, so we cannot rule this out. If we get even temporary participation at this 94.30, the market could get into the 96.20 area, and then we could see additional shorts there. Okay, so there are two scenarios for this market to keep in mind. This market can keep sliding lower and below 92.65 according to my price, and this is the future, the late future on the weekly here of the ICE US dollar index futures. If it continues lower below 92.65, you kiss goodbye the dollar, and the euro dollar is going to go to 122.20 at least. if this market gets participation on the weekly time frame, we're going to see how it's going to behave in 96.17, which would most probably mean that the euro dollar is going to retest, or sorry, test, I should say, 111.43. All right, so this is going forward what can happen. Unfortunately, I don't have the crystal ball, and I won't be able to tell you one scenario or the other. In fact, I never anticipate the market. I always react based on the way the market participates around these levels. And now I believe some of you, Todd, Marco, who else is here? There is only Marco among my students today, all right? But you have been looking at how price reacts at those levels, and you know what I do. All right, so I believe Todd has mentioned the US dollar, Canadian dollar. You remember 2 days ago I mentioned the fact when we saw this reaction here after after a 50% has traded. The 50% has traded on the gap up here, and we saw that on the daily. It's visible also on the weekly here. The market had traded an extension short, then gapped on Sunday at the open into 129.90 level here, and since then is moving lower. Now, the current weekly short is the one that you see here. So you can see reactions here. However, this market, is reacting for a simple reason, because the level that it has touched here, and you can see this touch almost to the pip to 126.36. It's a first target of this 50% as traded at the open. Okay, Todd. So no reason to be scared while you are seeing this little move higher here. To me, and the way I look at this price, it's profit taking. Nothing should be. There are not new positions being opened at those levels. Of course, there are always long position being opened, but I believe it's at this stage nothing to be worried about. I believe that's more of is more of a profit taking there. Now, it doesn't mean that this market can move higher and again go and test another 50% level, which could be from lows, from highs to lows here on the 4-hour time frame. And and we know that price price moves based on how algos are positioned on all time frames, plus noise, plus news, plus geopolitical changes, plus fundamental, shifty fundamental. But I believe that with the first class I've mentioned there, so how smart money and big hedge funds and big algos are positioned on all time frames, tells quite a good story about what we can anticipate for price to happen. So even if this price would go back into 128.10, I wouldn't be worried. Will it get there? I'm not sure, because this is more of a profit taking and reacting to divergences here rather than a new position being opened. Are you sure someone would open up a new position here? Yeah, some people might invoke previous size here, but the previous size were higher as well. So, it's an area of, some people would invoke an area of previous supply and or demand here, but to me that's not a good reason for buying this price. In fact, I believe the weekly will not buy this market until at least price gets into 120.60, and I think we are only a few weeks away from that level. I've mentioned that since weekly disappeared, around 130, 135, 136 here, and so I do not anticipate this market to actually react. So Todd, I hope that makes you more relaxed here. I don't know if there are any other questions from, I see new faces as well, Pere, Luca, and Planet. Lib Lovets have been with us for some time. So I wouldn't be worried there. And as you wrote there, pulling back slightly. I wouldn't. When you say it would be smart to wait for a retest, what level you have in mind, Todd? Just as a question, because that is not very clear to me. All right. So in the meantime, we can actually look at the usual Japanese yen. Of course, usual Japanese yen is reacting again to that level that we had already on the charts with 2 days in advance after we saw the low on was day was this was April 11th here. April 11th is when I came back from my holidays in Italy, and we restarted the show again. So the market reacted to that level, and then it actually moved into the level again. And when we look at US dollar Japanese yen, if we looked at the US dollar Japanese yen alone, we would anticipate maybe failure of the dollar index of holding that level. The point is that we cannot just look in one market to predict what the dollar index, which is an index of multiple currencies, will do. In fact, the euro dollar is a much better predictor of what dollar index will do for very simple reasons, because the euro currency covers around 60 to 64% of the dollar index. So if it's going higher, the dollar index will go lower. But we don't know whether this market is going to print a double top here. And there is nothing that we know at this stage, because we don't know what we don't know. But there is nothing that we know based on our models that is pushing this price higher, which means that this price higher, to me, at the moment, is being pushed by activity on the smaller time frame, not on the larger time frame that initiate and sustain trends. Okay, so when we look at the US dollar Japanese yen here, there is really nothing that well, I mean, of course, there is this double test of this second test of this 109.40, but second test, a dangerous test anyway, and this can be pierced anyway here. Now, the what I want to focus here is the larger picture. And the larger picture is telling us that, as we mentioned in the past days, and Todd, I had, of course, you saw Japanese yen in mind when I mentioned 106, above 106. And most precisely, it's the 106.90 level, which is our second target that we are looking for. So, as you can see, this setup here, which is being respected, also as a first target lines up with that level. To make a long story short, this resistance area is, is being tested for the second time. It could hold and bring price into this area, the 106.90. When that happens, if that happens, we will see. We will look at profit taking. We will have some profit taking, and again, this market will be pushed higher again. So it's not gonna. I believe it's not gonna just move lower and pierce this level. Now, if that happened, there is a good possibility, not certain, that the dollar index might actually continue lower, and we will see when that will happen. For that to happen, the euro dollar should actually continue higher. All right. And hi, FX Ambassador, welcome in. I see you are fascinated always by the pound. You're asking pound versus Japanese yen, as well as pound US dollar. So let's start from the pound versus Japanese yen here. So we have mentioned in the last few weeks a level that has been tested actually today. That was the 157.68. You will remember that I mentioned that as a potential extension for a continuation lower. Now mind that this market is on top of weekly longs, so here the daily have a tough job to actually try to contain participation at the weekly level, which is pushing this price higher. Okay, but that level that we mentioned a few weeks back, it's now in play here. So what has to happen for that that level to come into place? First of all, this market is very, very strong. You can also see the pace here on the 4-hour. It's extremely strong. So before we update this, something has to happen. Now I'll give you one level to watch that is going to tell us or provide a first hint on the 4-hour time frame whether this market is always going to hold or not. There are other levels as well that are very, very important below this. But if this market has to continue higher, and so if it has to demonstrate that the weeklies are stronger than dailies, we need to have a market that where the longs on the 4-hour time frames actually support this 56.72. And thanks for asking, FX Ambassador. FX is saying that's why I asked for pound versus yen, because it has tested the 157.68. As you can see, that level has been really tested, and you can see this from the behavior of price on the 4-hour time frame. Why? The level is here, and look at what happened when price got into that level. There was, clearly profit taking or a new shorts entering this market, and we can see clearly from the shape of this market. This is a 4-hour bar. So okay, so when we go back, and it's always very important to go back to the weekly time frame, right? What do we see here? We see a weekly area of potential support, which showed support, which basically a buying pressure that has been going on for 5 days plus 2 days, 7 days here, which put price into that 157.68. Now we have the weeklies fighting against daily short here. Who's going to win? And that's a very effective representation of how algos participate and trade one another against one another. And indeed, we can have the same family, the same bank, the same Goldman Sachs, or whoever is behind these classes of algos who actually are trading against one another, because they might be trading different direction in different time frames as well. And that's what happens all the time, because once their stop is hit, and these algos traded by the big banks, of course, have basically zero slippage and zero costs. They don't have the spreads that we have to carry. And so when they exit, which means that they can generate even more easily risk-free trades, or they can handle risk-free trades in a much easier way than we do. But we have other advantages, right? But what I want to say here is that they have the benefit of being in a position where they can trade one against the other, because worst case scenario that they exit break even, but now they keep a position on the other direction, right, on the larger or smaller time frame. So they won't let these opportunities slip, right? So practically 156.72 has to hold. If that doesn't happen, we have another level, and that's another level that I'm going to show here. And that's the 155.52. We don't know which of these two will hold. One of the two might hold. It would be very aggressive to enter long if you're looking for longs at this 156.72, while I would use this level to confirm continued long not to take profit at the stage. All right. If this market continues higher above 159.15, I want you to come back and we will look at this market, how we can keep trading this market on the upside, on the long side. All right. Very quickly, I have very little time here for the pound versus dollar, but I will review this market here. As we mentioned yesterday, this market is in a lateral move. It's in a very messy lateral move. And one could make the case that long start being respected here, and shorts have not been respected after longs have been respected here. So potentially this market could be out of the woods when it comes to shorts. So this market could be exiting a lateral phase here with an upward target into 140.87, and that makes sense also if we remember that the pound tends to move the pound tends to move together with the euro. So if that scenario, whereas the dollar index is unfolding here with the dollar index, maybe it's not confirmed yet, keep moving lower here, euro dollar is going to go to 122.20, pound has the potential to move into 148.87. All right, so short term here we could see a retrace. Could see a retrace of this market on the 4-hour, and that would be a great long opportunity. So right down this level, if the market gets into 142.55, that becomes a long for this market into the next move higher. There is also another extension here. It's a little bit higher. For that, you will need to subscribe to the FibStalker Methods coaching program. Just kidding. And I hope this helps, FX ambassador. I like to joke a little bit as well. Todd G, do you like emerging market as all? I do not understand emerging markets, unfortunately. So I do not trade. What do I not understand? Now, that said, if you give me an ETF of emerging market like Mexico, Brazil, we can look at it. But we also know that the majority of the equity markets are all tied together, and there is market tends to move together. Think of the comments I did last week in relation to SP 500 and how it compared to the German 30. So there is all the equity markets are tied together. Now the point is, why should I trade the emerging markets? We have plenty of stocks, plenty of ETFs. We have the SP 500, the equity, we have silver, we have commodities as well, we have all the Forex. I feel no need to trade emerging market, and I would make a disservice to you, Todd, if I would comment on fundamentals I don't know very well, or I don't know at all. So I think I make a better service to you if I just shut up and say nothing about emerging markets. You will appreciate more. All right, so this is it for today. So I'm going to start a brief summary of what we saw here in this session right now. So we started our session with the SP 500 and also took the chance to remind the great interview my friend Dale Pinkert had with Ron Meisel today on the LAR. Ron Meisel, I met him personally. He's one of the fathers of the Canadian Society of Tech Analysts. I had the chance to meet him in September last year, and I'm going to show a picture next tomorrow, maybe, just as a proof. We spoke about this SP 500 market. We say that triple top are very, very rare, and we're going to see soon new highs. This market can move into 2217 and 2400, and I believe this market can make it in 2500 before this market cycle is completed. We celebrated and we were very happy and cheerful, and we celebrated our target 1660 for silver. This market has exceeded any expectations, and he made much more than what we asked for, and he moved above that 1660 and is now moving into its second target at 1750, which might touch somewhere even this week. All right, and congrats to all of you who stayed with this trade, which took 36 days here from its inception around this area 1480, retested again at the beginning of April, and then in a number of just a handful of days here we saw move higher, consolidation of a few days, continuation higher in extension. This market is beautifully moving in extension, and if you want to know what's going to happen next, you can tune in on the live video FX Street Tokyo room, and we will talk more about this, and we will try to add to this opportunity. We then spoke a little bit about the dollar index, which is a very, very critical juncture here, still at that critical juncture that we identified last week. It's not a case that this market just reacted at this level. Of course, some people might invoke previous lows, but the reality is that there is a very clear weekly area of potential participation that has been tested 6 times, and now it's been challenged. What happens if the market goes below 92.65? You kiss goodbye the dollar index, which has been in a sequence of lower lows and lower highs. I'm sorry to say that, these guys, but we have to be objective to be, if you want to be traders, okay? And this breaks my heart, but I have to say this: if that price goes below 92.65, it's going to be very, very difficult time for the dollar index, which would actually could create an opportunity for the euro dollar to move into that 2030 that we have mentioned since some time. We know that the weeklies on the euro dollar are not willing to push this price lower. They want to push this price higher into 122.30, and that's where we could see this market moving to. We also mentioned the US dollar Japanese yen, and we say that this market has reacted to that 109.30 level again. The current move and behavior and dynamics in price of the US dollar would suggest a move lower in the dollar index, but we know that the only good predictor for the dollar index is the euro dollar, because of the way the dollar index is composed. And then we commented very quickly on the US dollar Canadian dollar, saying that there is no need to worry about this profit taking happening at that first target of the inner move. This market can move well into that 124.80, which we mentioned yesterday as the next target for this market. And finally, we touched on the pound versus Japanese yen. This market has tested the level that we gave 1 week ago, 157.68. And if he keeps above 156.49, we can see higher price, potentially challenging the 159.16. If that happens, the weeklies have won, and this market is going to offer new opportunities to trade long. If that's not that level is not respected and the price moves lower, the next level we have to watch is the 155.52. And finally, the pound versus US dollar has been moving laterally for days and weeks here, and now it has given the first proof today that this market can actually continue in moves higher. Next target for this market is 145.80. All right, so I hope you enjoyed the show, and if you did, what I'm asking you, if you could tweet about the show, I would really appreciate that. And also, if you want or know anyone who wants to join the FibStalker Methods coaching program, which is at its 4th edition now, and you want to join and get to learn the technique I use in my own trading, result of my own research, consider joining the FibStalker Methods coaching program, which is a quality coaching, high performance program where I coach students. Mind that it's not a course, it's a coaching program. So I take my students by hand, and I think that I can say that I produce some very good results. Of course, everybody comes with a different background, different time and experience, and of course to get the benefits of the course, you might require months, sometimes weeks, sometimes months. But I have students picking up in a few weeks, other picking up in few months, and others still working on it. But it is also how you are built and whether you are capable of trading levels like this, right? When they happen, that's of course that's not the best example, but if you're capable of taking counter trend trade on top of this level using procedural technique for timing, then this style of trading might be for you. All right, so thanks a lot for joining in today. I hope you appreciated the show and the levels and the levels that we are foreseeing here for the future. If you like what you see, please tweet about it, and I'll thank you very much. So have a great day, and I'll see you tomorrow. Bye bye now.